All right, cool. Welcome to Carter's Corner Pocket. We're through the Rocket today. We're talking GameStop. What's going on, guys? It's been a while since I did a live stream. I've been doing other videos, dropping stacks, dropping a ton of money. I want to do another video, but I've been trying to do a live stream for a long time. I've just been really busy. Son's birthday, all types of things. Thanksgiving, all of that. I'm chilling, yo. What's up, Jay Crispy? What's up, Michael V? I see you, yo. What's up, man? Hope everybody's doing well. Yeah. So basically today, I don't have too much time. I have about like less than 30 minutes. I have a whole thing that I wanted to get through, but I want to really make sure that I can get through it and really talk about it. And it's Mark Vadon, or Vadon. I've talked about him before. He's really he's Ryan Cohen's mentor. So I think he's there behind the scenes talking to Ryan Cohen. Ryan Cohen always throws stuff off of him. He's grown two multi-billion-dollar e-commerce industries. Billion-dollar e-commerce industries. He's just a master at it, and he doesn't go by the playbook. He's a contrarian, just like Ryan Cohen is. And I think Ryan Cohen gets a lot of what he does from Mark Vadon, and of course his father. He always talks about that, but Mark Vadon is in the background. He's been a mentor. He's talked about Ryan Cohen in this interview. This interview was done 11 years ago. He talks about a young up-and-coming CEO that's 28 years old, which aligns right with Ryan Cohen's age. And he says how amazing he is and how incredible he is. So I really want to pay attention to that. So I think I will do another live stream. I have a whole thing called the Vadon Effect. I have a thumbnail and everything. I would have gone live earlier, but I had to create a new thumbnail for the stream because it's only going to be like 28 minutes, 25 minutes. But we're going to get into what's going on around the world. Let me see. Talk about Dr. Burry, GME. Honestly, Ryan Cohen is all I need. Dr. Burry, it's cool. But like in my mind, it's like we're following. It's good. I was watching Roaring Kitty videos. I was really trying to go to the stream. I couldn't find it. Maybe he took it down. I don't know. Find the stream where he breaks down the Scion asset management letter that Burry wrote to the GameStop board. But I wanted to see his thoughts on it. And yeah, Michael Burry, it's good to have that support to know like we're right. Like Warren Kitty said this. And can you imagine when the stock's at $3, $4? He was like, he was saying, yeah, I'm just out here all in the open, like doubting myself. But then it's good to have Michael Burry write this letter to the GameStop board of directors and just to have someone else on your side, because you can go crazy just hanging out by yourself, having this bullish thesis. You wonder if the bear thesis is right. But now we're so far along. We know the bear thesis is wrong. We know the media is out against us. It's whatever they want to put, however they want to navigate this market. And just let me get through the economy real quick. We're losing jobs. U.S. lost 32,000 private sector jobs last month in a surprise drop. I'm just going to go through it real quick. So that's the private sector jobs. We have a layoff announcement topping 1.1 million this year, the most since 2020 pandemic. That's incredible, and that's all thanks to AI. I was reading new businesses. The thing is, like, yeah, they will lay people off. They will cut people due to wages, due to things getting more expensive, items getting more expensive. They're going to start laying people off. Like I said, they are laying people off. We're back in pandemic days, 2020. Can you imagine that? We have a whole invented fake COVID thing. They lay people off. A ton of people got laid off. Thank God for having my job. I'm like secure, but a ton of people got laid off. And we're back at that, but supposedly everything's booming, everything's great, right? That's what happens when four companies hold up the entire market. Yeah, I can't believe that when I read that. Since 2020, 1.1 million layoff announcements this year, and it's only growing. U.S. filings jobless benefits fall to 191,000, lowest since September of 2022. Still during COVID times. I'm not even going to read my notes. Okay, so this is also surprising because we're turning into the holiday season. What happens during the holidays? People hire seasonal, and it's still not affecting the numbers. It's still not working. We're already in December. They should have been hiring seasonal for Black Friday. There should have been hiring seasonal for the holiday time, for Christmas time, whatever, and that's still not making a dent. So that's alarming to me. It's what we say the whole time. Another thing is the secured overnight financing rate. Liquidity issues. I wouldn't call it like complete issues, but there's not an abundance of liquidity for market makers and dealers to as a backstop. So let me read this. New York Fed met with Wall Street firms about key lending facility. New York Federal Reserve President John Williams met with Wall Street's dealers last week about key lending facilities. Basically, the secure overnight financing rate, it's where they can go to for overnight financing, quick liquidity at a low interest rate. But the thing is that people don't want to go, dealers don't want to go into that market and borrow from the secured overnight financing rate. The repo facility, sorry, standing repo facility. They don't want to go and borrow from the standing repo facility because it looks bad to their clientele. They'll be like, why are they borrowing from that? Or are there liquidity issues? Is there a liquidity crunch? And then people will start pulling out. So even though it's there and they need it, they'd rather go to the market and pay higher interest rates to get financing for overnight financing. So yeah, so the standing repo facility recently hit 24.4 billion, the highest since November 6th, and reserve balances fell to 2.9 trillion. It's described as ample but not abundant. So what that means is if they have less of a liquidity cushion, so shocks, issuance settlements, month end, OPEX, it can create bigger rate swings. Also, the Fed rate, a rate cut is fully priced into the market right now. So if anything else happens than a cut, you could see the market tank as well because it's fully priced in. They're expecting a rate cut, and if it doesn't happen, you can see the thing go the other way. So that's where we're at right now. Let me just read through my notes just to make sure I didn't miss anything. Okay, I'm good. I memorized it. Doing well. AI stocks, it's overinflated. They're using 94% of cash flow spending it into capex, and they're borrowing, debt financed. You can see private equity firms flood the junk debt market to pay themselves. All of these articles, I guess people just don't read. All of these articles are out there in the open for everyone to see that there are fire alarms going off all over the financial markets and the world and economies. Private equity firms struggling to find buyers for their investments. They're turning to an old playbook like never before. Financial sponsors are extracting cash from their portfolio companies by raising debt to fund payouts to themselves and their investors at an unprecedented clip. Such as dividend loans have hit 28.7 billion so far this year, putting them on track to surpass 2021's record, 28.8 billion. They had to take that out because they weren't getting income to pay the dividends. So they're taking out loans to pay their dividends. That sounds good. We're hitting COVID times. Let me read the chat real quick. Yo, Sergio, what's going down, man? Planning a GME full story post sometime in December. There are a number of good hard lessons in that one, and I have an idea for what GME should do now. Michael Burry said he's dropping that. He said December, right? Yeah. I look forward to seeing what he has to do, what he has to say. Definitely he's one of them that got in at GameStop way back in the day because he saw something that others didn't. He got out early. He's got to be kicking himself. I can't remember his buy-in. It was in like $3.50, something around there. He made a ton of money off of it, but he could have made so much more. But yeah, definitely if you look back, it's always good to reflect, go back, think of your mindset, where you were, how much you've grown, the mistakes you've made. It's always good to do that with anything in life. But yeah, I really wanted to go live today just to say what's up. I got to take my daughter to voice lessons, all types of stuff. We got a bearded dragon. Pizza dough is made. Work is probably like, where the hell is he? No, I've been busy. I've been really busy. Let me check my work. Make sure there's no emergencies going down. Okay, cool. I can handle it when I take my daughter out. Yeah. And then my son's birthday, I had to do a ton of stuff for that. I made two cakes. I made a cheesecake and a red velvet cake. He wanted me to cut it in half and smush it together. So he's trying to like be slick and like get two cakes on his birthday. So we ended up doing that. That's where I'm at. So let's see. AI growth intact despite rising debt funding. I've said this before. Big tech companies are funding the majority of CapEx with operating cash flows. Today's leading tech firms generate substantial operating cash flows, and we estimate about 80 to 90% of the planned CapEx still comes from these cash flows. So all of their money is going into CapEx. AI is just way overinflated. It's just a matter of when, like Michael Burry's talking about game. That's surprising, right? And that's like, it got me boosted because it was on Thanksgiving Day. All the crap you could be doing on Thanksgiving, spending with your family, and this fool's talking about GameStop. That's why I love it. It confirms, that we know what we're talking about, we know what we're doing, and we know wholly. I mean, I can speak for myself. I know wholly why I'm invested in one company, and that is, guess it, GameStop. So what else? This is just what I want to talk about where investors' money is flowing. Like bigger investors, external investors. What the hell? I heard a big crash. Anyways, they'll be all right. Chinese AI growth stocks, they're vastly undervalued. They see what NVIDIA does, and then they just copy it, and then they go with it. If there's any issues with NVIDIA supplying chips to China, these companies are going to do it on their own. Look, China's NVIDIA just jumped 400% debut. China's answer to NVIDIA soars 425%. There's just many, if you read up on it, why it's time to look at China for AI investment, according to hedge strategists at a 6.6 trillion wealth manager. I'm not going to read into this, but I'm just saying, if you want to look into it, look into it. If you want to short something, nuclear stocks, nuclear AI-driven stocks, I gotta look into that. What is it? Nuclear and something else. I don't know why. None of this is financial advice. It's just stuff I've come across while doing research. So nuclear AI stocks, what is it? Rigetti? Is that one of them? Horrible. I was looking at, I think Jackie, RGTI. Jackie pushes this stock out. Oh my goodness. Look at their balance sheet. They're hemorrhaging money. Complete hemorrhaging. Cash and cash equivalents. Why am I even here right now? It's pathetic. Look at anything you want to look at. I just couldn't believe this stock, and he's over there talking about options off a garlic bullish harmonic thing. And speaking of that fool, we can go ahead and take a look. What am I even looking at over here? Seriously. Pick anything and you'll see a balance sheet. That's why I'm looking at income here. The revenue, even though cost of revenue has doubled, look, 2.8 to 5.09, started over here 1.7, 2.8, 2.8, 5 respectively. The cost of revenue has gone up, but the revenue is going down. Look at from 2022, 13 million, then to 12 million, then to 10 million. This is a horrible company. Look at net income. Negative 71 million to negative 75 million last year, to 2 years ago, and now we're at minus $200 million. Yeah, this is definitely a stock to short if you want to short something. Look at their operating margin, profit margin. Oh my goodness, they must have diluted. Look at the profit margin from minus 625% to minus almost 1900%. It's pathetic. I don't need to waste time on Rigetti. But yeah, so I really wanted to do the Mark Vadon thing. That was the whole point. But here, a unique way to invest my money that isn't the stock market. Even AI picked Pokemon cards. ChatGPT suggested investing in Pokemon cards due to scarcity, cultural value, and nostalgic demand. This person said when they had extra cash, they wanted to invest it, but not traditional in the stock market. So recently had extra cash. And then this is the thing. When I take forever to do my lives, I highlight stuff, but it all gets erased. So anyways, yeah, even ChatGPT picked TCG cards to invest in. Let me see what's going down now. Hold up. Option traders here. This is another thing that's like really odd to me. Option traders may be capping the S&P 500's upside, strategists say. Investors have aggressively sold contracts expiring with 0 to 5 days, 0 DTE trades. Market makers who have taken the other side typically hedge by selling shares as the market rises and buying on dips, a pattern that can blunt intraday rallies. That's why the market's not going anywhere. That's why it's just staying over here. UBS, of course, UBS analysts highlight a different trend. Retail traders piling into short iron condor positions, which involve selling both a call spread and a put spread around the current index level. Those trades profit when the S&P 500 stays within a tight range, but they also increase the hedging burden for dealers when prices drift toward the upper strike. So if you're over there buying calls, they have to buy puts to hedge. If you're over there buying puts, they have to buy calls to hedge. According to UBS Kieran Diamond, those one-day iron condor flows have become large enough to leave a noticeable mark on the S&P 500 positioning. Dealer hedging can be especially intense near the close, when gamma exposure peaks. On October 24th, for example, UBS estimated dealer gamma had reached about 90 billion just before the bell, meaning even a 0.1% move in the index could force roughly 10 billion of buying or selling. Let me read this real quick. Index to extend gains during U.S. trading hours. Okay. Not everyone's convinced. I just want to see. Others warn that systemic short volatility strategies often work until a burst of volatility hits, at which point losses can be severe and long-lasting. Yeah. So, I mean, that's true. They're only banking, and where's the percentage? It's massive. I had the percentage. I can't find it. I should look at this. It's a crazy amount of option traders. It's like 40% or something of the trades are option 0 DTE option trades, like 0 to 3 days to expiry option trades. Absolutely crazy. I can't believe people are able to gamble like that much. Here you go. Got it set up perfectly.
Maybe Ryan Cohen's trying to apologize to me? I don't know. We will find out. GameStop stock itself did decent. It was green most of the day, and then towards the end just fizzled and dropped below yesterday's close, and I was an idiot, and at the right close I bought 208 0-day expiration options for tomorrow at $23.50.
How did that work out? GameStop closed $23 on the dot. So what did he do? Lose all his money? I thought he left GameStop, but he's still over there playing options because he was playing options the whole time. Let's go ahead and see. I expected GameStop to come down after that pump, the mini pump. 10 days, was it 10 days in a row? We were positive, and that's because of gaps. I do think in due time GameStop's going to take off, go up. What I really believe is that we're going to rock it on the annual shareholders meeting when we have our annual reporting come in June, because it'll just be undeniable when we report $500 million revenue. I can't wait to see what PowerPacks does for this quarter. The reason I say that is because, well, I just think we're going to meet a point at the apex of this, whatever we're drawing, constantly changing. Okay, here we go. I was looking at this. I can't even remember. Okay, and this repeating pattern over here. Let's see. Let me just see. On the MACD. This happens before. This is all make-believe land, where I just draw this stuff. But I saw Roaring Kitty draw it in one of his videos, so I started drawing it. A triple top, triple bottom, and then we take off, okay? This is on the 5-year chart. Let's see if it comes to fruition. But that would end around June, and we would take off. But now, let me go to the daily and go back to the initial squeeze, and you'll see the same type of pattern occur right before we took off. A triple top over here, triple top, and a triple bottom, and then GameStop rocketed. So we'll see what happens. I think it's going to be the annual shareholders meeting. It'll be around June. We'll have multiple quarters of power packs. I mean, if you can see the way people are ripping packs, I was watching people. I'm so thankful I got $2,500 Charizard card. The original card that'll only go up in value because it's the original chase card. I love it. PSA 9. The 10 is like $25,000. But I'm glad to have that. Hold it. I'm glad because that's what I collected as a kid. That's what I wanted. It's like old dudes going out buying old cards like Chevelles or whatever Bel Airs, whatever you want to have. It's not technologically advanced as newer modern day cars, but they want it, and that's what I wanted, and that's what I got. So I'm happy with that. I'm so glad I get to hold on to like the grail of all grails, like to me. But yeah, so that's what I have. A GameStop. I see a repeating pattern. If you just want to take a look, I don't know. This is what I'm just finding through the charts. I think we're right around here. What happened over here? Let me, because my camera. Let's see. Back in when I say over here, I like to call out dates here. March of this year, we hit the top of this demand zone. Had a good boost up over a few days, and then we dropped back down. That's on earnings. So I could definitely see us coming back down, and the reason I think so, I think we're right at that point where we'll come back down, and then we'll head up, probably to test this line. Maybe they'll fade us back down into our earnings, and then we'll take off. We'll see. I can't predict it, but that's where I think we're right around this area, and we're going to see a drop down. I'll show you why. Like I said, it's because of gaps. I don't even have the gaps up. Let's go see. I did mark the gaps where we have gaps, and we closed some of them today. What's the time? Oh shoot, I gotta go in a second. It's not even loading. But let's see. Oh, okay. Here we go. Yeah, okay. Here were two gaps that were closed today. I had these marked over here. There's some gaps over here. Gap that got closed today at 2307. Gap closed at 2298. Let me open the gaps to get a little visual. They're already calling me. Hold up. 480, 90 gaps. Okay, cool. So now you can see all the gaps that are open. Some of these, I went through them individually to make sure like there were clear gaps. So I highlighted the clear gaps. So we have a gap over here. And gaps don't always have to get filled. They generally get filled. They don't have to. Like NVIDIA has gaps that are like way, way down like a long time ago. So this is just the only reason I think we're going to come back, because I look at the pattern, I match up the TA pattern, not even TA pattern, just the patterns from history of what's happened with GameStop. We have a gap over here at 2230, so I expect us to come down there. And then the lowest gap I can see is over here. All of these little gaps, only where I mark the yellow is where the gaps are like clear and open. Multiple cent gaps, not just 1 penny gaps. But these are only like 2 cent gaps, so they're small gaps. But they still are gaps. We got 2156. We have a gap at 2154, 2150, and 2144. Okay, so 2144 is the lowest gap that I see in this chart. Yes? Yeah, I know. Are you ready? We can leave in 5 minutes. All right. Cool. Yeah, so those are the gaps I see. The lowest gap that I see that's open, it's a multiple cent gap, so I think it's like, it's more official. It'll be 2144. So that's where I could see us pulling back to. And that's what leads me to believe, like, having that gap open, and looking at what happened previously after we bounced off of some form of support and got a slight boost in our stock price right over here. And then we pull back down. I didn't see if there's any gaps over there. I don't think I can go back that far. But that's why I think we're going to pull back, close that 2140, whatever, 44 gap that I saw, and then we'll head back up. Probably, most likely to test this orange line at 2850. And if we can break that, then we're going up. Over here is 30, like into the 30s, mid 30s. So that's where I'm at with GameStop, the stock. Quick update. Let me see if there's anything else. Yeah, we did the option trader stuff. UBS stuff. Yeah, China tech stocks look attractive relative to stretched valuations among U.S. counterparts. UBS wealth management executive says, uh, yeah, for AI exposure, our AI exposure is way overvalued. So anybody telling you to put money into it, I guess you're putting it at the top. I can't say for certain, but I think so. It's definitely a little crazy the way the valuations that AI is getting, especially when people are going into the debt market. Like, what are the earnings that you have to make? You have to consistently make in order to get a return off of what you're borrowing to put into it. Like, it's crazy. Home Depot cut earnings. This was a while ago. You can see I was doing this on November 18th. What's it? It's December 5th. I haven't gotten around to it. I've just been busy, man. Busy time of the year, expensive time of the year, especially for me to be dropping at least two bands on a power pack. They were sold out. I was thinking of another one, but I think in the future maybe I'll be doing like the $50 rips, something like that, uh, just to do a live stream for myself. Um, I don't know. I want to get back to these live streams. The man who found golden dog food. I'm going to do this and then I have to head out. Ryan Cohen traveled from Fort Lauderdale to Palo Alto. This is all part of the Mark Vadon thing because he went to meet Mark Vadon. Ryan Cohen traveled from Fort Lauderdale to Palo Alto, walked into half a dozen venture capital firms. Got no, but he's relentless. He said 3 months later he tried. He walked in there and he's like, "Can I meet with the CEO? Can I meet with them? Can I meet with them?" Like one after another, he walked down business to business, office to office, trying to get meetings, trying to get funding. It's just to show the mentality of him. And this is the mentality. Like, he's going to kill local card shops. I was watching Moran's. He's like, local card shops. That means little card shops. Like, what are they going to do? They're so scared. GameStop just has the money to dominate the market. We can pay a little bit extra premium, run them out of business, and then just dominate the market. Like, or, like, they're no threat. They're zero threat to us. Here, listen to what he has to say. 3 months later, he tried the same tactic again. "I'm relentless," says Cohen, a college dropout from Montreal. "It felt like it should work. It did not." Says, though Cohen has struck out Silicon Valley, Chewy attracted interest from Boston's Volition Capital. In late 2013, Volition invested $15 million after watching Chewy exceed its growth targets. Ryan had crushed all his numbers, says Larry Cheng. When Cheng asked Cohen whom he'd like most to have as board of chairman, Cohen named Mark Vadon, founder of jewelry site Blue Nile and flash sales site Zulily. Cheng made the introduction and flew Cohen to Seattle to meet with Vadon, who was impressed by Cohen's attention to detail. Second person that said that was Nat Turner, right? He knew the specifics of economics of transportation contracts with carriers, says Vadon, who agreed to serve as Chewy's chair and invest $5 million of his own money. 5 more investors followed, including T. Rowe, Price, and BlackRock, combined total of $236 million. So we've had two people over time talk about Ryan Cohen's, like how impressive he is, his attention to detail. And the biggest thing that lets me know how smart Ryan Cohen is, and Morantz was talking about this, he has people that are older, wiser. Most people that have that much power, that much money, they're headstrong. They'll be like, I know everything. I built this. I built that. I got to this level on my own. But no, he's humble enough to say, like, I don't know everything. I'm getting in this market. I'm bringing Nat Turner on board. He is an expert of all experts in the TCG business, grading business, and we're going to have him on our board. And that just lets me know how smart this guy is. He has Larry Cheng. How smart is Larry Cheng to invest in Ryan Cohen, to see Chewy through? Now he's still with Ryan Cohen. So there's so many great aspects to GameStop, investing in GameStop. Wise, smart people, especially Ryan Cohen. Like I said, like bringing Nat Turner on, he could have been like, okay, this is great. But he brought Nat Turner on because he knows he's the expert in this category. He's the expert over here. He's not doing the Chewy playbook like he said. Bring on Amazon people, old Chewy people doing that playbook. It's a new playbook, and we're inventing it as we go along. And everything that comes out from GameStop is a big success. You see the Walmart has their Pokemon TCG bundles, booster boxes priced just alongside GameStop's, and we were the first one to price it that way. So yeah, we're doing big things. Expect big things. I think we're taking off in June. Investors right now, they want to see I'm just thinking of it from a logical standpoint. I gotta go. Investors, they want to see the results, so we're slowly building up results. Look at all these green quarter after quarter after quarter. You're going to see the annual numbers come out, and it's going to be seen as an attractive investment to others. But until then, man, can't stop, won't stop, GameStop. I'm gonna try to get the Mark Vadon thing done, live stream done. Can't stop, won't stop, GameStop. Peace. Have a good